Hello and welcome to Building Tomorrow's Insurer, where we explore the cutting edge of InsurTech and digital innovation in the insurance industry. I am your host, Nigel Fellowes-Freeman, and today we are diving in to the crucial topic of the Australian insurance landscape as the second part of a two-part discussion we've had with a very special guest we have here. He's actually in Australia now, which is it's good to have you on these shores, Troy. It's Troy Barnes, a leader in transformation and change. Troy, we're in part two. We're going to take the conversation a little bit further. And today we're going to talk about customer trust. Insurance is inherently meant to be an industry that's full of trust. It really is built on a thing that you pay for, that something will come back in time when your need arises. And I think it's something that sometimes the insurance industry has struggled with and maybe not done an incredibly good job of building customer trust. But I'm really interested today to dive into it, get some of your perspectives, and really see what does it take to become a valued partner to your customer. And so let's start. Let's kick off, is right with you, Troy. And we want to kick off with, in every exec boardroom, in every innovation session, it really always starts with, what does it mean to be truly customer centric? Now, you and I know that it varies from customer to customer and insurer to insurer. But take claims as an example, biggest customer pain point. Let's go through it. What do insurers need to do to play a more active part in their customers' lives, to become more trusted and a better partner to them?
Yeah, this is a great question, Nigel. We could go on this for about several hours, but I'll avoid that.
Oh, we've got a little while. We can go for a bit.
It's a good one. Many people refer to the claims journey as the moment of truth in the insurance landscape, and I would twist that a little bit and call it the moment of trust. Why? Because customers have been paying premiums for protection largely across a vast array of insurance business lines. In the essence that they trust the insurer should that risk eventuate or that time of need happen, that the insurer will be there. Now, if I look at recent reports on the industry here in Australia, on the life insurance side, a code of conduct was done last year. Breaches and complaints went up. The biggest contributor by far was claims. And if you look at the headlines recently, admittedly, Australia is exposed to certain weather events that are a little bit more prevalent here than other parts of the world. There are the floods that happened. There are still people without homes that are going to court or parliament or wherever they're going to try and chase monies back for insurers. They've paid premiums for years. So I think when we talk about being customer centric, I'll take a couple of steps back. The first thing for me is engagement with the insurance industry is not frequent. Whether you're a life insurer or a general insurer, customers will engage you 2 or 3 times a year, plus or minus. 2 to 3 times per year, plus or minus. And that's the insurer playing the traditional role. Now, when that happens, it's hard to understand or know your customers to the intimacy you need to be an active role in supporting and helping them and protecting them. So I think the first thing for me is where the biggest gap today is in the industry is the engagement with customers. When I say engagement, forgive me, I'm going to go old school here and I'm going to talk about face-to-face engagement, not surveys, not digital interactions, and God forbid, not team or Zoom calls with focus groups and the like. This is really getting into the customer's territory, one-on-one conversations, even extending that into a little bit of ethnographic research, which is observing customers in their natural environment, to truly get that essence of what customers need and want from their insurers as they move through their various life stages. The second thing here is today, just about every organisation in most industries gets some form of customer feedback. Again, there's a gap between acting on the feedback and communicating back to the customers, particularly when things can be improved or adjusted or made better or changed, but albeit in the essence of being a better partner with the customer.
Is there a way, Troy, sorry to jump in there, is there a way that you think you've seen historically is the best way to get customer feedback? what like the most effective channel is?
Yeah, so I don't want to say it depends, but I think what you've got to do initially is the more the better. I mean, that's the rule of thumb. And the more immediate, the more better. So real-time feedback in the moment is when you typically will get the most honest, accurate feedback. When the customer has done something with you, get it then. Even digitally, put the prompt up, send the email out. You've just done something with us. We'd love to get your feedback. Keep it simple, but keep it specific. If it's not great, there's a reflective question that suggests or requests the customer to tell us where it wasn't great. That gives the insight to take action to make it better. And if it was great, tell us where it was great, because it also gives the opportunity for insurers to reward their team, the department or function that's responsible for that particular service. It's nothing's better than to go down and say, guys, hey, look, our net promoter score this week jumped 10 points. Fantastic job. Well done on the improvement efforts that you guys are doing. Keep up the great work. So that is definitely one thing. Social media, obviously, is another platform. It's ongoing. It's active. It's where your customers are of all ages today. So exposing the brand, and most do have a placeholder on their social media platforms, whether it's Facebook, Instagram. A couple have started to venture into TikTok and the like. You've got Messenger, and even some on the business side have gone into WhatsApp interactions. Use them, but use them where they're meaningful and they're acted upon. There is nothing more frustrating than a customer who takes her or his time to give a brand feedback to have it largely ignored. And that's just what causes frustration, and over time obviously causes your customers to go somewhere else for their business. So yeah, and I think definitely in the claim space, coming back to the core, claims is a very simple outcome for customers. Pay me. Everything inside of that is really noise and a distraction for a consumer. The challenge we have, because insurers are built on the business model of risk and risk management, typically, and I've said this for a long time, operate on the side of guilty until proven innocent instead of the other way around. Now, admittedly, there are some dodgy characters out there. I can say that with an Aussie audience. I'll get that, but they're few.
Bad actors, if you were.
Yeah, they're a very, very, very small drop in the Pacific Ocean in the grand scheme of things. And I think there's a lot more to be done in that side where customers get insured. And I think this is another mindset thing, not because they want to claim. I don't think there's a customer on planet Earth, maybe a handful of very unique individuals, who insure themselves to actually claim something. And that sort of leads into a conversation maybe a little bit later, but as it stands, when they do, start to stand tall in that moment of trust, because in that moment of need as a consumer, I need you to have my back. And for the 99.5% of us, this is a legitimate time of need with a legitimate request for payment for something that I've incurred, whether it's car, whether it's home, whether it's health, or something else. Please be the partner I've paid you for over the years, now that I need you to help me. That's for me where the gap is.
Yeah. Do you think, Troy, part of some of the trust issue is that PDS and wordings are inherently complex, and therefore a risk carrier takes a view of, we will pay out to the letter of the PDS. And often a customer, I don't know, we're probably low single digits in terms of number of customers, percentage points that read a PDS before purchasing a policy. I don't know what the number is, but I imagine it's pretty small, and therefore believe they have coverage for things they don't have coverage for. And then sort of that moment of claim, I think that misalignment of what's understood to be covered versus what the carrier has covered in terms of whether it's coverages or limits or whatever these pieces are, exclusions, that's when I kind of look at the conversations that I have around claims. It's often this misalignment of those two things of what you believe you're covered for and what you actually are. And that leads to conflict. Do you have any view on that? Do you have any view on what you've seen around simplification of wordings versus actually, you know what, it's better for the carrier if it's below a certain dollar figure, pay it, because your net retention of the customer will be much better than to push against the $500 claim. Just kind of interested in any perspectives you have.
It's a great one. I think the first problem you've got here is it's opaque on a good day. The level of transparency could pick up enormously on all facets of the industry. And there's a great book, Nudge, that's written by a couple of professors where it talks about influencing behavior and nudging consumers in the right direction for the right reasons. But they also have this reference term called sludge, which basically refers to what you just mentioned, which is that fine print, the stuff that's just added to consumers to complicate decisions, affect experiences, and impact their sort of ways of making clear outcomes or driving clear outcomes. So yes, there is a real, there's much work to be done in that space. And what's interesting for me, I'll end on this one before I move into the positive space. Even recently in the Australian market, there was a startup that had gotten funding and has now gone into a new line of business in insurance. I went on and did the journey myself. I was quite excited. I thought, great, there's another disruptor in the Aussie market. This would be brilliant. And the PDS that was halfway through the journey on the website was 117 pages. Now, if this is what disruption looks like, we got a problem. This is 2024. And you're right, there's a lot to be done. And this is not done in isolation, though. Let me just say that this needs to be a collaborative discussion with, not just within the company and the insurance business itself, but also with the regulators. Coming back to that level of transparency, you've got to build trust. Unfortunately, as we mentioned in the first episode, there's some question marks in that space. There's work to be done, but the work to be done is worth it, to your point, because at the end of the day, what outcomes will be driven is growth. You'll get more customers that'll come to you as a brand of preference of others if you get the ingredients for this right. And then if you build that level of trust and transparency across the experiences, the ones you've got will stay longer and spend more with you. I mean, that ultimately is the quintessential single driver of growth. So, I think the challenge is out there for someone to, take the bull by the horns and drive this. But to your point, that simplicity is key. I've seen a couple of companies that have gone to a 2-pager for the policy document. Of course, there's attached documents that you can send later, which most customers have never read in their entire life. But the ones that tell them exactly what they're covered for, how much they're covered for, and when they're covered for it, you don't need 4 chapters and 100 pages to write that to a customer. And you give them that level of transparency and confidence up front, which subsequently builds trust, because they know if any of those things that they've just paid you money for are covered, then God forbid, not that I ever want it to happen to me, but if it does, I know you've got my back.
Yeah. I was looking at an unnamed insurer's PDS a few weeks ago, and it had a hovercraft exclusion in it for a small business policy. I just could not help but chuckle and thought, this obviously a risk has happened at some point in the last 40 years around a hovercraft, and obviously the guys have then therefore put it into the PDS area. I thought it was kind of nice. When we're kind of pulling that back to customer centricity, to your point around making a 2-page or something in terms of transparency, to bring that all the way back, transparency with the customer around what is covered, what they should expect, and so that point of need, i.e. claims experience, there's a known exchange of value between customer and carrier, and then everybody's happy and everybody wins. And I think that when we're all in our innovation mindsets and thinking about what we can do to the drills around a customer, I think that is super, super important.
Yeah, and just to finish off on the sort of the claims part, just to give a practical example.
Yeah, be great.
In my past employer, we went after something that insurers avoided like plague largely, which was the ability to pay a claim instantly. Now, there's 3 countries that are doing that across a broad range of products where a consumer can scan their claim and fill in some gaps. Not many, the gaps that the tech doesn't pick up the data from the receipt that's just been scanned. And all the work is done against the policy, their history, the claims history, the underwriting that was done when they bought the policy behind the scenes. And in about 30 seconds, those customers are having not only the claim approved, but the money paid into their bank account. In fact, it pops down the screen when you're on the last sort of congratulations. Now, if you go across, and I did this as part of the keynote I spoke at last week, go across any website of any insurer, I'm certain the one thing you won't find is a promise or guarantee around the time it'll take an insurer to pay a claim, not to approve a claim, because the customer doesn't care about approving a claim because I don't get my money back, but how long it takes to pay them. And today, Australia included, instant banking and instant transactions and transfers are prevalent right across the industry. So there's no excuse. The benefit here is the NPS score, the Net Promoter Score for those markets is sitting now almost at 90. Now, if you go and ask a CEO about that kind of score in the industry, unheard of. That also contributes directly to your top and bottom lines and profitability of your organisation. So there's some real proof points out there to go about this without increasing a claims loss ratio or condoning bad behaviours in customers. We haven't seen that at all.
I want to play a little game with you, Troy. You and me were sat down in a you're leading transformational change for a carrier. We sat down in the start of Discovery Week, and we're looking at the customer life cycle. We've got prevent, predict, manage, recovery as those kind of 4 phases of the life cycle that we can be involved in. How would you lead the conversation? Where would you take us in terms of what roles carriers generally play today, and where should or could they focus to be more successful in playing parts, thinking about the customer and everything we've just spoken about?
Yeah, Nigel, I think this is probably the most exciting thing that's sitting on the laps of the insurance industry today. For the most part, now this is regardless of which line of business you're in insurance, whether it's general, life, P&C and the like, insurers have been a passive player. Now, passive being largely responsive to when a claim takes place, I then get my act into gear and then I do something about it. Now, and I'll spend most of the time on the next point around the individual health and well-being aspects, because that covers a lot of the industry. The World Health Organization has published a report, I think it was last year, where 74% of mortality or deaths globally are driven by non-communicable diseases or chronic diseases, of which about 60% of them are driven by poor lifestyle and lifestyle choices. Now, this raises the opportunity of intervention. The same organisation has presented some data around every dollar invested in legitimate intervention can drive about $7 of economic returns, whether it's at the market level or at the organisational level. So there is a huge role, an opportunity for insurers to move into a more active partner in an insured's life, and particularly where claims, I mean, at the end of the day, claims is one of the biggest factors, if not the biggest factor, that affects the profitability or sustainability of an insurer over the longer term. Without going down the path of trying to invoke hurdles, fine print to what you said earlier, and all these other ways that can avoid or potentially deter or prevent paying a claim, there is again, as you mentioned earlier, a win-win opportunity for insurers to play a intervening and more proactive role into preventing the claims happening in the first place. And as I said earlier, go and interview 100 customers. I'm guaranteeing 99% of them or 99 of them will tell you, I don't want to claim. I don't want to fall over and do an injury. I don't want to burn my house down. I don't want to have a car accident. But I know if I do, I'm avoiding financial ruin by having my insurer cover me. Now, if there are many ways where insurers can play a role in preventing those things happening. And again, coming into the health space, a lot of those lifestyle choices, lack of physical movement, there's chronic diabetes, cardiovascular, and particularly as the populations are getting older, there's a lot of tools out there. Now, the good news is I'm seeing both locally and internationally a few insurers starting to play that kind of role. And I think a couple of them are still trying to figure it out, which is great because that part of experimentation and learning about what the customers will engage with and adopt will go a long way to, one, creating better and more healthier citizens in the market, and two, avoiding unnecessary health care, health costs, health services by moving into that active intervening role, nudging people to generate more positive behaviours. But I have to say, it needs to extend beyond the step tracker.
I think in the Australian market, I know obviously I'm keen to hear from you on one of the experiences maybe you've had in the market that you've been in for a little while now. But there's in the Australian market, if you look in the life space specifically, AIA are probably the folks that are doing the most in that prevent arena. I think I think it's called Vitality. I think the product that they've pushed through, which is a play in what we're talking about here, right? Which is how can you help a customer reward for healthy behavior, which will minimize potential claim, improve profitability of portfolio, et cetera, et cetera. And so I think there are like small pieces of this being shown. I know you had a big part of some of the work that you did previously in the application and the take up of that, and the penetration that it had was pretty mind-blowing. Can you kind of talk to us that a little bit in terms of the test case and what you saw in terms of uptake, et cetera?
Yeah, sure. So one of the things I was tasked in my previous role was to try and address the issue of engagement generally, because people don't engage with insurance companies that often. And my response to that was absolutely. However, we'll need to be more than insurance. We'll have to do other things to be relevant for people to engage with on a daily basis. So we went down the path of integrating a lifestyle health insurance platform, spending more time on the lifestyle health intervention space, and two, addressing the challenges of accessibility and inclusivity, because for segments of various markets, insurance is not affordable and may not be a viable option for people to undertake at certain points for many different reasons. But the ability to intervene and engage the markets as a whole, there's no limits to that. There's no reason why we can't. And I think there's an opportunity to give the brands far more exposure and awareness and reach those cohorts, those segments of the market that typically insurers struggle with, particularly the younger age groups. So we went down that path and introducing some science and medically backed feature and functionality. We sort of introduced this goal-based concept, which was personalized for people to wake up in the morning, during the day or at night, address challenges such as physical movement, stress, anxiety, sleep deprivation, which are very common as part of that chronic disease issue I mentioned earlier, and give them some content that was either scientifically or medically validated to help improve those parts that they may or may not have a challenge with. And of course, give them some rewards as part of the feedback loop within the platform itself. The most profound thing we found is that the take-up of that was fairly rapid and fairly quick. Now, there was no hurdle, as in there was no subscription fee up front. This was freely accessible. And integrated into the journeys was the ability for a consumer to do a facial scan and get 5 or 6 vital indicators, again, medically validated, where that data was not going to be leaked anywhere. It was going to retain itself with the company that I worked with and not shared anywhere else. That was part of the upfront data privacy. But it was there to reinforce what they had tried to achieve as a healthier outcome. So if you were, if you're going through a little bit of a stressful period, you needed to relax or just chill out, then there was a journey to take you through. And at the end of it, the scan would give you some information to show your stress level and maybe your blood pressure were in better positions or in good positions that at least gave you the signals that you might be now a little bit less stressed, less anxious, whatever the situation might be. Interestingly enough, the appeal to non-customers of the company I was working with was phenomenal. It was about 80% didn't have a policy with the company. So we had ticked the box of building something appealing to the market as a whole. And when you break your customer segments down, we had between 18 and say 55, almost an equal section of the people on the platform came from each one of those 5 to 10 year segments right across. Most interestingly was we had about 8 or 9% of people over 65 on there. So this myth about the elderly not using a smartphone is rubbish, sorry to say. And the digital reports that you can now get online across pretty much every country in the world are showing that the penetration of smartphones is now pervading also into the elderly and retiring age sections of the market. And for a country like Australia, where there is an aging population, I think we've got about 7.6 million people in Australia who are 55 and over, who can legitimately retire. But the penetration rate here in smartphones, I think, is high 80s or early 90% over the population of 26 million. So it's certainly got the right essence there. We played to that. We were deliberately building a native app, so something on the smartphone, again, because of the numbers, and that's where customers were. And we wanted to introduce habits that weren't the New Year's resolution type or the let's go and lose 5 kilos in the next 10 weeks, because it doesn't happen, it doesn't stick. So we plugged into the science around what people are already doing every day. The only difference on the platform was there was a holistic approach to doing what they already do, but drive it with some science to get better health outcomes. And that was the real sticking point. That's great. It was a huge success.
That's fantastic. Customer centricity, super important. If you do it well, customers like it and sign up. So, massive props to that. I'm going to take a little sidestep left, if that's okay.
Go for it.
And sticking on the theme, of course, of customer centricity, but cost. Cost is something that is on every consumer's mind at the moment. Obviously, inflation is driving pretty hard, specifically with the insurance market. We've had a hard market for a little while now, and that's caused some really, especially in Australia, I think last year 40-ish% on a bunch of property insurance in terms of increases. There's some really, really meaningful price jumps on home, on car, across the spectrum, really. Actually, probably not worth just pulling out those, but I guess the point there is cost inflation is a thing. And I'm interested in your view on, with keeping the customer in mind, what should carriers be doing? Have you got any thoughts on, when you're in the exec teams of these carriers, what we should be thinking about, what the advice should be? How do we pay this back? How do we help our customer? Should the regulatory bodies be involved here? How do we stop this very quickly spiraling cost of insurance at the moment?
Mate, this is a great question, and there's probably a handful of answers to this, depending on which angle you take it from. I was looking at some data this morning on the Australian market, particularly around the non-life and health insurance. Now, over the last 17 years, the premiums have gone off the charts. But at the same period of time, there's a big difference between that and both the claims volume over that same period and the average cost of claim for the same period. So I think the first challenge here, more at an industry level, is to look at this holistically first, because you look at 3 charts, one just goes whoomp like that, and the others have got indifferences. And I think there's firstly to look at the data, and I think data is a big topic because it's not something that the industry has been great at yet. They have a wealth of data.
So just to play that back, Troy, to jump in, you're saying there that the cost of insurance is, say, 3x, but the cost of claims paid out has 1x, for example, 1.5x. So there's a big divergence of basically revenue for carriers, but what's being paid out has not really increased by anywhere near the same volume. Is that kind of playing that back, what you're saying?
Yes, I'll give you one type. So I'm looking at one type of insurance in the market here where for 17 consecutive years, the premium's gone up. In the most recent period, last 12 months, it's gone up 12%, followed by 9% the previous year. The average claim size over that same period has had several years of negative or no change. And then the claims frequency, only once in 17 years has it gone above double digits. It's had, again, 9 years of negative growth.
So where is that cost base going? Is that going in OpEx? Is that just going straight to profit and margin? Is that going because there's poor technology in these carriers and therefore the kind of just operational cost of people is higher? Is the reinsurance cost more? Where do you kind of plug this number? Where does this number, do you think, come from?
Yeah, there's certainly investments. Over the same period, huge investments in technology, absolutely, and look to be fair. And there's a number of public examples of this. A lot of those, or some of those, particularly really big ones, haven't gone that well. So there's some investments that have gone in to try to bring the industry forward, modernise it, make it better for the consumers. And obviously more products. There's regulatory adherence that needs to be checked and balanced, and reporting and things like that. Plus, again, without dwelling on the negative side of it, there's been the issues over the last 6 or 7 years that have had to be remediated. And with more regulations, of course, you've got distribution channels that the cost of acquisition has, I can imagine, has gone up substantially over the years. Operating costs definitely would have increased. I think one of the things that the industry hasn't done super well with is scaling. So where you build your client base, over time you're able to scale that productivity so that the margin gets bigger as you grow your business. And therefore you've got these two lines going in the same direction. And of course, there's other things in that space, like attrition, staff movements and transfers, and more broader investments. So there's not one answer. There's a whole gamut of things. Yeah. But I think, again, for me, it's a great topic for exec teams to sit around the table and, have a look at where can we do this better as an organisation. Where can we be, more proactive with consumers? How do you help, businesses sustain themselves, get into that intervention space? We talked earlier about some of those examples. There's limitless opportunities to be a proactive role in consumers' lives, no matter which line of business you're in. Guidance in home and contents, car, incentives is another area. One of the real common areas where you can nudge good behaviours are those incentives. The no claim bonus has been around for a long, long time. But there are other ways to incentivize customers and good behaviours, and leveraging partnerships. And again, this has become more of a recent change in the evolution of the industry. What I'm seeing is a lot more partnerships happening outside insurance. More recently, what you've seen probably in the last 2 or 3 years is the embedded insurance starting to come a lot more to the fruition, where insurers are placing themselves into other industries, making it easy to have the kind of coverage they need, but without, taking them through the laborious work of filling out forms and all that kind of stuff to get insured. And, the travel industry is an easy example of that. You go and book a flight, you tick a box at the bottom that gives you travel insurance, and it gives you a quote there. There's terms and conditions hyperlink, which I think pretty much nobody reads, but it's there, and it's made it convenient and easier for insurers to be connected with the broader aspects of engaging with consumers. And I think that will continue to grow a lot.
Yeah, I think so too. I think the warranty space and the travel space has done embedded well for quite a long time, actually, specifically in Europe. And I would say that actually Asia is probably leading the world from an embedded micro insurance standpoint. I think there's a bunch of brands that are doing a really good job throughout Asia on the embedded side, and we're big believers in that space. We think that there's a lot of growth to be had if you believe the McKinsey reports, etc. Upwards of 25 to 30% of global GWP, kind of 2035-ish. So lots and lots of billions of dollars of premium to go through those channels potentially. And that I believe, I agree in terms of the CAC does come down, that customer acquisition cost does come down if you're able to acquire the customer through a slightly different channel. Troy, I want to finish us off this conversation in a positive, aspirational way. And we're big believers in the Australian insurance industry. I'm sure you are too.
Yep.
And we think that there's a lot of untapped potential here. I'd love to get your thoughts on what should those CIOs, CTOs, CEOs, when they're thinking about growth initiatives, when they're thinking about trying to look at what things have happened globally that have been really effective, that can unlock the untapped potential here in Australia, what should we be thinking about?
Great question. I'll start with the broad view. At the end of the day, companies grow sustainably when they're able to acquire more customers and keep the ones they've got with more value. That's it. And if you sort of put them as your true north and come back to where do we stand today, it's, again, the fundamentals: get trust, build trust, work on trust. Now, that can permeate through your whole organization. This really comes down to a people side of things and a mindset and culture that you emphasize that permeates through the organization. Everybody in the organization has a role to play with giving the customers great experiences, to trust the brand when they need it, and for the employees to feel like they're part of that journey. Then I think really it comes down to, the next step for me is ruthless simplicity. Something that I've spent a lot of time on outside of Oz is everything is up for question. When you're going through this transformation change process, a lot of things have remained through the industry for a number of different reasons. And more often than not, the comment will come, well, we've kept it here because, dare I say it, it's always been done this way, or we believe that's what we have to do. I've found over time that, in a respectful way, questioning everything that's on the table, don't accept anything of the status quo, provides enlightening opportunities to simplify, to take the myth out of everything we think we need, and keep adherence to your risk management, your regulations. You don't need to compromise any of those to dumb down what it is we do. And I know it sounds a little bit of a contradictory statement, but just keep it simple. And then modernize in a way that engages customers. Customers, love it or not, are on the phone. If your digital movement in your organization isn't happening with a smartphone in mind, then you're not relevant. Sorry. So there are some fundamental things you can get started with now. And I think, again, mindset, culture around this nimbleness, this agility to build technology rapidly. Simplification is not just about the business side of things, the processes, the work that's being done, the menial tasks. This is equally important in the technology, your architecture, the environment, the legacy that's been built up over time, and God forbid the layers that have formed over the years as part of your tech stack. That now, to pay a claim, I need A to go through B, through to C, back up to B, then down to D, across to E, and then back down to the bottom system to be able to pay a claim. Same principle. Look at your tech stack and challenge everything. I think you'd be surprised how much can be just removed. In using what we refer to as a lean term, it's waste. It's just not adding value or creating value. I think if you can get some of those things, those things can be empowered right across the organization. And that's where I think from an employee point of view, start build some teams who really have that, trust and belief in what you just said earlier. How do we change this industry? How do we bring it forward? How do we shine the light? all those things for me are ones that you can start tomorrow. You don't need, $100 million to invest in them. Mobile apps today can be built in 4 to 6 weeks. It requires the mindset to think about it very, very differently, one. And two, start way outside the four walls of your building with your customers. Talk to them, engage them, interact with them, act on their feedback in hours, not in weeks. And just keep that cycle through. I think it sounds like a lot, but, simplicity, customer, challenge everything, and really frame the industry about moving forward and modernizing with what the world needs, with what consumers deserve for paying their premiums to you over the years. I think trust will come. I spoke earlier about the net promoter scores that Apple and Amazon are used to, that are available and have been achieved in the industry. Building new things, engaging customers in fun and different ways. And as you asked me at the start of this call, step over the fence, play an active role, give them some value to help them get a better quality of life. I'm very passionate about this whole wellness topic. I think there's a lot of players out there. Most of them are playing in narrow verticals. I think a holistic approach to wellness, and that stems from that intervening relevant role that insurers can play, I think will pay off massively. It's more relevant to consumers. As a brand, you'll have far more impact and engagement with the market as a whole. That should drive more customers. It will be great for the ones you've already got, which I believe will pay and spend more with you. You don't buy a life insurance policy, or you buy one health insurance policy for a multi-dimensional insurer, and that's it. There's a relationship here to build over time. And then it's, the world's your oyster. Go after it. I think the only thing that's limiting right now is just mindset. If we can open the doors to that, get the CEOs to really drive that huge ambition and a level of uncertainty, get people into that, well, we don't know whether this is going to work or not. No one does. But that little shake-up and the empowerment and encouragement that comes with it, I think, the industry here could turn around the noise that was here a few years back really quickly and have some brands that can be spoken about. I think there was a report last month here about the top 10 and the lowest 10 trusted brands in the market. My challenge to the industry here is, how come 5 insurers don't make up the top 10? You are in an industry that has a unique role across a very lengthy part of a person's life. That means there's a relationship to build over many, many years. Trusted, bonded, engaged, where, why isn't the number one? That would be my challenge industry-wise. Number one trusted brand in the next 5 years needs to be an insurer.
Troy, that is a wonderful place to wrap. The challenge has been set. Next by 20, well, let's say, let's give ourselves 5 years. By 2029, 2029, we'll have 5 insurers in the top 10 of most trusted brands in Australia. I think that's a wonderful aspirational thing that can be a reality. And Troy, with folks like yourself, potentially bringing and helping some of the Australian insurers here to get us there, I've a lot of confidence that we'll make it. So thank you so much for these last 2 episodes. It's been so wonderful to go deep and broad and wide with you and understand and draw some of your experience. So thank you so much for the time. It's been so insightful, and I'm sure everyone listening has really enjoyed it. So thank you so much. It's been great to have you here.
No, my pleasure, mate. And as I always say to the staff I always work with, the best is yet to come.
Thanks, everybody. Thanks for watching. If you want to watch the video version of this episode, head to our YouTube channel. The link is in the description. And if you'd like to hear more from industry leaders who are pushing the boundaries of insurance, check out our other episodes of the podcast series, Building Tomorrow's Insurer. Spotify, YouTube, you name it, it's there. Go and find it, listen, provide your feedback. Thanks, everyone, for listening in, and have a wonderful day.